two things that we can look into as to why this is happening. Is it because our pricing is not covering our costs? And basically, are our costs too high? So, can we lower our costs? Can we increase our pricing? Those are the two levers you're going to be able to pull to improve your profit margins.
Welcome to The Expansion Code. I'm Heather, and I could not be more excited to finally launch this podcast. This is the space where we dive into all things business, growth, leadership, and team expansion. I am really passionate about building something bigger than myself, sharing knowledge, and creating opportunities for others to thrive. I started solo, and now I lead a team of over 50, so trust me, I know the highs and the challenges and the incredible moments that come with scaling a business. Throughout this podcast, I'll be sharing insights, strategies, and conversations with some truly incredible guests. We are going to cover everything from marketing and leadership to mindset shifts and business expansion. So my goal is to give you real actionable takeaways that you can apply to your own journey. Let's dive in, learn together, and unlock what's next. Welcome to The Expansion Code. Welcome back to another episode of The Expansion Code with Heather Dick. Today, I have Hailey Piper here. She is a fractional CFO, and in her description, I freaking love it. She has a soft spot for spreadsheets and small business dreams. That's who likes spreadsheets? No one.
I know, but I'm that girl, I'm getting married in October, and when I tell you I love spreadsheets, it's like everything is spreadsheeted for this wedding. Like everybody's even to-do lists are spreadsheeted. So it's like, it's true. I do love living in a spreadsheet.
Hailey, we need people like you in this world, okay? I'll bring the color, you bring the spreadsheets, and we've just got that's perfect pairing. So Hailey has a Bachelor of Commerce and her CPA designation. She spent 4 years in public accounting, where she discovered her true calling, helping entrepreneurs understand their finances and feel empowered. And I swear to God, Hailey, every business owner that I talk to is scared to talk about money. They're scared.
I know. I honestly, that's been the biggest thing maybe I'm getting ahead of myself here, but that's honestly how this all came to be. Was I was in my girlfriend she cuts my hair, and she also has a social media management business. And she was like, I just have so many questions. And when tax time comes around, like, what the heck is this? And we would just yap about it while I was getting my hair done. And she was like, I have so many people who would also benefit from this. And honestly, that's how it snowballed. Was just, I think so many business owners share that same feeling of I understand my business, but when I open up the financials, that's a different language. So yeah, I like being able to bridge that gap. I think it's fun.
Well, and I've mentioned this multiple times in the podcast, but especially in the beauty industry, we're really good at cutting hair. We're really good at doing lashes. But that's art and creativity is our passion, taking photos, whatever it may be. The business side is usually not our jam. And that's one of the biggest reasons. Well, that is the biggest reason why people fail. And podcasts like this, having individuals like yourself, which is a fractional CFO, which I think a lot of people aren't going to understand what that is. So we can talk
100%.
about that. It's a benefit to everyone. So why don't you tell us, what is a fractional CFO? What do you do for a living?
Yes. Okay. I love this because it's so funny too. I met with a old individual from university, and he was like, I'm really curious. I think you can help me with my business, but I don't understand what fractional CFO means. It sounds so technical.
Yeah.
And I was like, well, really, it's just a CFO for the fraction of the time and a fraction of the cost. And so I was playing around. I was like, do I call it contract CFO? And I was like, I got to get good at explaining this. But basically, I find a lot of times, and this kind of goes back to my days in public accounting, is a lot of time is spent from public accountants on those large ticket clients. They're paying the big bucks year over year. They might be a little bit more complex too, business wise, but typically a smaller business kind of gets in and out of their corporate year end in a week.
Right.
So there's not a whole lot of time spent on talking through processes and numbers. It's more so just an in and out.
Yeah.
And so that was where I kind of thought, okay, fractional CFO, a lot of times to small business owners, you don't necessarily need an internal accountant, let alone have the funds to pay for an internal accountant. So having someone come in, whether it's once a month, once a quarter, even annually or just kind of sporadically where needed to have those conversations that you would have had if you had an internal accountant, is kind of the gap that I'm trying to fill with the fractional CFO work. Yeah, I don't know if that, hopefully that's kind of clear, paints a
No,
picture a little bit.
it is clear because I think that one of the things about a fractional CFO, the benefits of having a fractional CFO or a position like yours is that these smaller businesses not only don't have the funds for it, but they don't have the necessity. So, like,
Yes.
they don't need someone on payroll shelling out $5,000 a month for them to do their accounting. They just don't have that need. But
Yes.
as you mentioned, we need some help.
Yes. No, it's so true, and even, something that has been a nice, I guess, bridging exercise too is a lot of times small business owners will have a bookkeeper, and so sometimes there's questions for that the business owner has to the bookkeeper, bookkeeper has to the business owner, and I've been
Right.
kind of facilitating that, being able to
Mm,
be like, as a third party, when I review your financials, I would expect to see this balance here, this balance here. Maybe there's some revenue missing. This is telling me that your revenue should be this amount, but I'm not fully seeing that here. So I think it's a good, just additional perspective. I think that's a really the biggest benefit I can provide is a little bit more clarity, a new perspective on your finances, and honestly, just answering any questions that you've been like, what even is the balance sheet? You
yeah.
know, like
Yeah.
some stuff like that, where, yeah,
It's
sometimes,
your thing. Yeah, it's and,
yeah.
also I find that, money is scary for a lot of
Yeah.
people. Money's really
Yes.
scary and will turtle head a little bit where it's like, "Oh, I don't know, like I'm pretty sure I'm doing okay. I've got money in the bank. I don't know if I'm making money."
Yeah.
Or at the end of the year, your accountant says, "This year you made 15%." Or you didn't make any money last year. Like having a hold on that as the year goes through is very important.
Well, and kind of speaking to that as well is there's nothing worse than you get to tax season at the end of the year and you're like, "I have literally no idea how much my tax bill is gonna be." So something I've been doing, for a couple individuals is we do monthly tax estimates where I take that month's revenue minus that month's expenses and put it in a tax estimate. That's what it basically calculates out what your 2025 tax bill will look like. So we can be putting
Mm,
funds aside for that each month. And you're not like, okay, I could be paying 30,000 in tax. I could be getting
yeah.
a refund of 10,000. I have
Yeah.
no idea.
Yeah.
So I agree. I like the proactive nature of it. Because it's true. Honestly, there's nothing worse, and this happens so often in business, but getting surprised.
Yeah.
And I mean, I think a lot of that can be mitigated with some financial planning and with we'll chat about this more too into our next episode, but um just kind of taking your historicals and making sense of them and really understanding your seasonality.
Mm,
When do you get the most amount of revenue coming into your business? When are your biggest expenses? And really just getting a good feel of the financial flow of your business.
yeah. Yeah. And, you talk about, I'm just going to go back to your tax
Yeah.
comment because every business runs differently, right? So some
Yeah.
businesses might have a huge nest egg that they've
Hmm.
built up. And so tax time comes and they're like, "Nah, I'm not really scared. I know
Yes.
I've got X amount of dollars and it's usually roughly paying $30,000. So I'm okay." But
Yes.
especially solo entrepreneurs, they're living off of their clients. And so they
Yep.
don't have that nest egg. So I think that that's where a lot of people tank. And I've had stylists work for me that were contractors, so sole proprietor. And they're like, I got to go back to being an employee. I owe
So
whatever it
much in
is.
tax. Yeah.
Yeah. And then they're tanked. And it's just so unfortunate because it doesn't have to be that way. Okay. So I have some questions for you.
Okay.
I came up with a list. I'm
Ooh,
prepared.
I'm ready.
Okay. First of all, I'm going to talk about KPIs, but can you describe what a
Yes.
KPI is, please?
Yes. So it's just a fancy acronym. Us accountants love acronyms. There's literally
Love
acronyms
it.
for everything, but it's just short for key performance indicator. So
Okay.
again, that's like, what is that? But basically, they're just quick little numbers that are like, okay, either I'm operating well and within my goals and targets, or it's a red flag.
Mm,
So some of them, I guess a couple of my favorite ones that I'm like all businesses need are gross profit margin. And so that again is just accounting lingo, but basically telling you your revenues minus your direct expenses. Like, how profitable is your services or your products in relation to all the direct costs that go into offering those services or products. Easy one too on the balance sheet is AR turnover. That relates to your revenue as well. So making sure money is coming in, your AR is turning from, okay, I'm offering a service, I'm waiting for payment, to collecting that payment and putting it on your income statement. So those two right off the bat are two of my favorites that I think every business should have.
What is the difference between revenue and profit?
Okay, so revenue. Ooh, I love this one because I feel like on Instagram and social media, people will flex big revenue numbers,
Oh
but
my
then
God.
you're like, okay, but were you profitable?
Totally.
So revenue is all of the income coming in the door, straight from your services, straight from the sales of your products. Profit, though, is how much money you're keeping after you've taken all that revenue, subtracted all of the costs. So, all of the direct costs going into bringing in that revenue, but also all those costs of keeping the lights on, operating, employees, all those expenses. That's your profit. And I like to take it a step further because maybe I'm going on a tangent. Maybe it is one of your questions.
Go
I'm
for
sorry
it.
is but I do feel like the biggest disconnect is between profit and cash on your, like, where is the cash at? So I think a lot of
Mm.
times businesses will be like, whoa, I brought in $100,000 last year in revenue. I made a $50,000 profit, but feel like I have no cash to spend. And so there is another statement in the world of accounting called the cash flow statement. And it
Mm.
doesn't get a lot of, I guess, like, prime time because it is a little bit more, I don't know, maybe wonky to wrap your head around, but it basically is showing you all the spots on the balance sheet that I guess cash is flowing to that you don't see on your profit and loss. So I'm getting a little bit technical, but I'll break it down. So when you're looking at your income statement or your profit and loss statement, you're only seeing the revenue coming in minus the expenses going out. But you're not seeing items such as if you have debt, you're not seeing the principal repayments on any debt. You're also not seeing, if you're a sole proprietor, any cash flowing out toward that you're taking out personally that isn't
Right.
necessarily a like paying yourself a salary. So that those two areas, if you had, say, $10,000 in profit at the end of the year, but you had $30,000 of principal repayments, well, then your cash flow is going to be negative. Even though your income statement is showing like, you were profitable. So I think that is what I get super passionate about, is because I think that's where people struggle too with that tax piece and like, oh gosh, I only made $10,000 this year, but I owe X amount in taxes. So I don't have any cash set aside to pay it. So that is my favorite, I guess, tool to gap that, to tie together your profit and your cash flow.
So would you say that that's the first thing that you analyze in a business's financials?
Yeah, so typically what I'll do is I'll export their profit and loss, kind of run through that, and then I will layer in anything from their balance sheet that is cash flow payments coming out. So I'll get their actual, I would call it their cost of doing business.
Right.
So basically, you're calculating all of the expenses that are required to provide all the services and sell all the products that you do sell, include all those operating expenses, but then also include all those debt payments, the amount estimated for taxes, anything else on the balance sheet that's not getting captured, anything else where cash is flowing out, but that's maybe not captured on the profit and loss, include that all in there, sum it all up so you know exactly all of your expenses, all the cash flowing out. So then you really know, okay, my cost of doing business is like, say for the whole year, my cost of doing business is 100,000. Well, then I need to work backwards to price all of my services and products to make sure I'm covering my whole cost of doing business and not just my operating expenses.
Gold.
Ah, yay.
This
Okay. I love it.
because I'm, like, sitting here nodding if you're listening, I'm just like, "Yes, Hailey. Yes,
I always
Hailey."
worry. I'm like, "Am I
No.
losing people?"
No, no. Well, and maybe
Okay.
you're not losing me because you're speaking my language. I mean, obviously,
Okay.
business is my passion as well. So, but I also feel like the people listening to like our listeners
Yeah.
are also passionate about this, and they're passionate
Yes.
about growth, and this is how you grow.
Yes.
Um,
Yes.
and
100%.
you can't. So, like, especially the conversation that you just said, the $100,000. I think that's one of the biggest things. Like when I'm working with individuals that are looking to scale their business, like let's say from a home based
Yes.
business to a commercial space, it's a lot of money that you're gonna spend a month, and it's not just a lease, and I say this all the time. It's
Yes.
not just a $2,000 lease that you're taking on. Now you're
Yes.
taking on like, if you went from home base, now you have 2 Wi-Fi payments, your house
Yes.
and your commercial. You have
Yes.
your software might be different. Maybe you have to pay for alarm systems. There's just so much more, that comes with it, and it's not impossible. You just have
Right.
to understand how much you need to make.
Yes.
And so I'm curious if you have like a formula. So if someone is going out to go from home-based business to commercial space, is there something that you would work with a sole proprietor or, an incorporated company that is to get to that place?
Yeah. Honestly, your best tool is building like what I would typically do is building out a forecast. And so we would just sit down, we would take all of your historicals as our jumping off point, and then we would factor in. It would take a bit of and that's the hardest thing, okay,
Yeah,
going from a lagging metric, so lagging metrics are anything reporting on historical, so it's already happened.
right,
Leading metrics are we're trying to predict the future. So it can be done to the best of our abilities, but there will always be a variable of risk.
right.
There's always gonna be something that, like, it's always open for fine tuning. So what we'll do is we typically I'll build out like, okay, well, you're going from a home business to a commercial space. So I do have a template of like, okay, these are all of the things that we need to plan for. Yes, your rent, all of the leasehold, maybe improvement costs of getting the space up to what you need it to be. Are you hiring on some staff? Are you building out a website? So I pair this with almost, it's called a risk analysis, and so we kind of just go through your whole business and figure out, okay, what are the worst case scenarios? What do we need
Mm,
to be planning for? And then we try to quantify them. So putting a number to it, and it's something too that I would definitely recommend if you're making big changes like that, having someone like myself or somebody who is in the financial space and can support you in the same way of doing it monthly. Because for a small business, say I'm working with a photographer and they want to build out a forecast of like, okay, what is my next 2025 and 2026 going to look like? I can kind of do that once and maybe we tweak it halfway through the year if anything's have drastically changed. But if you're going from a home based business to a commercial space, likely stuff's changing
mhm.
weekly, monthly, pretty frequently. And so having the most up to date information in that forecast is going to help you, I guess, end up with a better forecast and having more preparedness, less surprises. So I don't necessarily think, and this is like the worst answer that accountants always give, because I think everybody wants it to be like black and white and like, okay, A, B, C. These are the steps that you do. And I think I have like a rule of thumb on how we would do it, but everyone is so different.
Yeah.
And it like I'm going on a tangent, but even
No,
like
you're
this
good.
like the psychology side of it too. Like I was chatting with a
Mm,
lady the other day and she is like, I for my own like to sleep at night for my own mental health sake, like maybe this isn't logical, but I just need to know that I have that $5,000 there
yeah,
and maybe it would be smarter to invest it. Maybe it would be smarter to do this, but she's like, I don't care. I just need it there for my own sanity. So I think that's the piece too. In if somebody was going from like working out of their home to a commercial space, some people are a lot more comfortable taking on a larger piece of debt.
totally.
Some people that scares them a little bit more. So I think that part I always end up chatting. I end up giving two or three options of like, okay, we could, forecast it for this. I like to be conservative and be like, okay, let's have additional amount of money in this emergency fund for these things that kind of pop up. But some people are really a lot more okay, I guess less risk averse. So I think it always comes down to me needing to listen to exactly what the client is saying.
You know, it's so interesting, especially with debt, because I think
Yeah.
that, people that are willing to take on debt, which is great. It's there for us to leverage, right?
Yes.
Like it is there to
100%.
help us, especially if you don't have a nest egg. But that is another thing that people don't think about is
Mhm.
now they've had a home-based business. Let's say this home-based business makes $5,000 a month, takes in
Yes.
revenue. And they're like, well, I could easily, if I have X amount of space extra, I can easily take on a $1,500 rent plus, whatever, whatever.
Yes.
But let's say you need to take on a $15,000. I mean, these are small numbers we're talking, but it doesn't matter. How do you work with someone that takes on a loan plus has to start a new business and add all of these things? How do you get them to make enough money so they don't fail?
Ooh, that is a good question. I think there's a lot of conversation that goes into it about, okay, really working backwards and starting out with what are your main revenue streams? And so I think that is the jumping off point because if we're then if we're then factoring in additional expenses and additional debt, we need to make sure that your pricing structure and your service offerings are going to cover and foot that bill. At the end of the
Right.
day, it's as simple as that of like, if no revenue is coming in the door, it's just not going to work. I think that's a place that I typically will start with the forecast is we'll layer in all those expenses and then work backwards to be like, okay, if you're going to do this, you need to have consistently 6 clients a month and they need to be paying you this amount of money so that you don't fall below this I guess yeah, this profitability
Threshold.
level.
Yeah.
So you can keep the lights on. And I do think that I try not to overcomplicate it because I think a lot of times we try to find certainty in spreadsheets.
Yeah.
Like sometimes we'll put down, okay, if I bring in 10 clients, that'll bring in this much revenue and that'll cover all these costs. But it's like we also have to take a look in the mirror and be like, okay, does this make sense? Like, do you have the capacity to bring in 10 more clients?
Hmm.
Is that a realistic looking back on your sales growth? So I do think I try to play devil's advocate when I can and not obviously not crush any dreams because
Yeah.
I think I bring in the perspective of all right, let's try to build something sustainable. We don't want to take on all these expenses and debt and then be stuck out here with like nothing, like kind of having to backpedal in a sense. So
Hmm.
yeah, I don't know if that answered your question.
No, it did. And I think it's also, it's tough because I've seen lots of business. Actually, vividly remember one company, they had taken on a huge space downtown. This is when Blush was out of my house still.
Yeah.
And they came to me and they said, we have 12 makeup stations and we'll give you exclusivity on these 12 makeup
Yes.
stations. And you'll have a downtown location. It's going to be $5,000 a month. Otherwise, we've done the math work. And if we don't rent it to you, these makeup stations could profit $10,000. And I was like, no one's gonna pay this.
I
Like,
know.
I just know that no one is gonna pay this, and I realize that you guys have these forecasts and you have these
I
pipe
know.
dreams that these stations are gonna be used 8 hours a day. I'm in the industry, and I'm telling you, people are not gonna
Yes.
pay that. They're just gonna go to
Yes.
their client's house, and they're gonna actually make more money because 'cause they're gonna charge travel, and now they don't have to like, it's just not gonna work, and I think that, we have these dreams of, building a business and having so many people, but we're not as realistic as we should be. So I think no, I think that that was perfectly said.
It's so hard, and I do see this so often too, because it's so easy like, yeah, it's so easy to get married to the numbers in the spreadsheet and just be like, "Well, if I sell this, I'll get a gross profit like, I'll get a gross profit
Mhm.
margin of this,"
Mhm.
but, yeah, if nobody's gonna buy it, you're not
Yeah.
gonna get that gross profit margin,
Yeah.
so
And if there's no need for it
no
too,
need
I
for
think
it,
that's,
that's huge.
seen so many business owners. I remember one guy, I'm just keep telling stories apparently in this episode, but
Same.
one guy I was talking to, he was a oilman and he's like, oh, I just really want to own my own business. I want to open a coffee shop. And I was like, there's no need for a coffee shop. Like there's so
I
many coffee
know.
shops, you know?
I know, and that's the psychology and emotional side of it, is, like, you can do it, like Oh, I'm telling so many stories too, but, breweries are such a good example. When I used to work in
Mm,
public accounting, there's always a bunch popping up, right? So,
yeah.
and the margins are so thin. Like, to me, a business like that, it's not a, "This is gonna be my bread and butter and keep my, my lights on, put my kids through university." This is a fun, I have additional cash sitting in the bank,
Mm,
and I wanna do something fun and have my name on it. Maybe it's more of like an ego
yeah.
thing, because when I look at businesses like that, it's like it's so like it really does depend what business you get into as well. Like, there's so many factors that go into it, and I sound like I'm crushing people's dreams, but I do think it's good to have these conversations
I
at the
agree.
beginning. Me and my girlfriend were kind of looking into opening up a business of sorts, and we were like, okay, well, we can't get married to it yet because we need to figure out, could we, is this even make sense, like, are we
Hmm.
going to spend all this money up front and then find out in 6 months that it was all a waste, and nobody even wants this. So
Yeah,
it's a tough one, because there are business owners and people who've created like life-changing stuff that I'm sure have gotten a million no's.
of
So
course.
it's so hard to differentiate the no's and what no is actually okay, yes, like, well, maybe no's though will redirect you. Maybe it'll redirect
Totally.
you into the right place. Maybe it's
Yeah.
not gonna totally crush your dreams, but then it's like, okay, back to the drawing board. Let's pivot, you know?
Yes. Okay, we need to take a little break because, shocker, this podcast is brought to you by my flagship company, Blush, and I need to give a shout out. So, not only does Blush sponsor my lavish lifestyle, it also sponsors this podcast. Shouts. If you know me, you know that I do not play around when it comes to beauty and self care, and that's why Blush is your one stop shop for looking and feeling your best. We genuinely do it all: hair, makeup, nails, massage, tattoo, medi spa. Basically, if it makes you feel like a goddess, we probably offer it. So, whether you're looking for a fresh balayage or a relaxing massage or a little of that I woke up like this glow, we've got the experts to make it happen. Think of it as self care, but with a little extra love, sunshine, and family. And actually, with our most recent expansion, we now have a private gym, physiotherapy, chiropractic services, and a lot more to help your body. So, if you are ready to treat yourself, book an appointment at Blush Artistry because let's be honest, life's too short for bad hair and uneven eyeliner. You can find us at blush-artistry.ca or over on Instagram at blushartistrymua. Back to the episode. What are some red flags that you have that people should look out for, like in their profit margins, like things that make you go,
Yeah.
"Oh, this is not the best."
I think largely it's very industry specific. And
Okay.
so I say that because I think a lot of times too, we want to compare. Everybody wants a great profit margin,
Of course.
and kind of going back to that brewing example, there's just some businesses where it's really not. Some profit margins aren't necessarily obtainable. They're going to
Mm,
be thin, and that's where volume comes in. So if you have a product that has a relatively small profit margin, meaning, let's just run with the brewery example. You're selling a 4 pack of beer for like $14, and the cost to manufacture it, package it, ship it out is maybe like $12. So you're really only getting, I'm just using theoreticals
okay, I
here,
was like,
but
"Oh my god,
yeah,
that is
yeah, yeah,
no
but
profit."
they can be pretty thin. So if you want to make a large profit, you're going to have to sell a lot of volume.
Right.
Whereas there is industries where, oh boy, like even service industries can be a good example,
Mhm.
where a lawyer, like they're charging a premium for their time, and they really only need to probably spend like 5 to 10 hours to make a really good profit margin.
Mhm.
So I think that's a big one, and that kind of ties back into like the proper pricing is it's always good to see if there is room for improvement in your profit margins. And I think that's going back to the KPI piece. This is why I think it's so important to track it, and track it consistently, because if you're seeing your profit margins like declining year over year, going from like 10% down to 9, 8, 7, it's like, okay, there's two things going on here that is tell I guess, sorry, I'm like getting excited.
That's okay, I
there's,
love it. You're so
there's,
excited about numbers, it's
I'm
so
so
nerdy.
excited. I'm like, woohoo. There's two things that we can look into as to why this is happening. Is it because our pricing is not covering our costs? And basically, are our costs too high? So, can we lower our costs? Can we increase our pricing? Those are the two levers you're going to be able to pull to improve your profit margins. But the industry piece comes into play because there's going to be acceptable profit margins per industry. So, in the beer example, you're never, well, I never say never, but you're probably not going to buy like 4 pack of beer that's like $60 and
Yeah.
then the cost of creating that product was like $10. Probably not going to see a profit margin that large. So I think knowing what industry standards are for the industry that you're in, so you have like a comparative, but also being able to look at your own year over year is so key because that can be in the brewing example like, oh, is this because of the cost of tariffs,
Mm.
or what has changed this year since last year if I'm selling a similar amount of product. So those will kind of be your red flags to then dive in further to isolate what might be going on there.
Yeah. Okay, that's a great answer.
Oh, yay, okay.
Yeah, no, 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 it's good. Okay, so then how do you, or do you, maybe you don't, but how do you help your clients manage their costs without sacrificing things like quality or client experience? Because I know that lots of times, like, a coach of mine always say, you got to trim the fat, you got to trim the fat. So,
Yeah.
stop buying granola bars. But I mean, it's only $40 a month. That adds up real quick. It's like death by a thousand cuts. But how do you help manage those costs without sacrificing?
Yeah, this is a really good question because each business is different too. So
Sure.
there's going to be costs in certain businesses that are lifelines that they need,
Yeah.
that might not be seen in other businesses. So one that comes to mind is marketing. I think it's a lever that people will be like, I'll cut my marketing expense. Like, whoa, that's an easy
Mm,
place to save. But it can actually have pretty big impact if you are getting a lot of revenue coming in from those marketing endeavors. So
mm,
I think that one I'm a little bit more wary to cut initially right off the bat. So areas I typically will dive first into any sort of operating expenses that hang out in like office business expenses. Can we
yeah.
trim the fat? Are we kind of spending in like more frivolously?
Mhm.
But you a lot of times business owners aren't. A lot of times
Yeah.
they're like, you know what, I'm being pretty conscious of my spending. So my next area I'll dive into then is, say you have like a commercial space and you're ordering either inventory or office products like gloves, all that jazz. Stuff that you need in order to sell your product. Really trying to negotiate bulk
Mm,
ordering discounts. I think trying to negotiate I love negotiating, so
yeah.
trying to negotiate anywhere you can with that, and really trying to only order when it's necessary and doing it all in one go. I think sometimes business owners will operate, especially sole props, small startups will operate on like oh, yay, we got like a bunch of revenue coming in the next month. Like, shit, I'm going to run out of gloves and this and that. Like, they'll put
Mm,
in an order for like a small amount of things. And you might be paying a little bit more for ordering so frequently. So that's one I'm always like diligently looking for, is their opportunity to save on bulk order costs.
'kay, I have to interrupt. You said sole
Yes.
props. You abbreviated something again.
Literally, I know. I'm
Sole
like,
props. I'm like, "What is this?"
well, it's you honestly, accountants, it's funny too because in my day job, we're always like I work with a lot of non-accountants. Like there's only maybe 5 accountants in where I work. I work in marketing. And a lot of times I'm talking in acronyms and they're like, is this an accounting thing or is this like an actual company term? And I'm like, this is
Yeah.
a company term. But it's so true. I'm like, oh, they just roll off the tongue.
It's so funny because accountants love numbers and hate letters, apparently. I think that's what
Literally.
it is.
Yes. They're like, how can I get this out in the most short
Totally.
form possible?
Totally.
Oh,
Okay, sorry to interrupt you.
no.
So, quality of service or quality
Yes.
client experience. Another
Yes.
example.
Yes. So, and that's why I'm also like, it's also really good to know what directly goes into each service that are like your non-negotiables. So, and that might be, say you're offering facials and there's like a jelly mask that like clients are like, ooh, that is like, I love that. It's like, okay, if you know clients love that, you're not going to cheap out there. So I think getting really in touch with what what is it in your product or service that really moves the needle for your clients, making sure you're not cutting costs there. But a lot of times it's getting creative with calling your internet, your phone provider, hey, can I
Mhm.
negotiate a better rate? Calling
Mhm.
your insurance, calling your landlord. And it's a tough one too, because a lot of times business owners will just not take a salary. And
Yeah.
I see that so often where they just like don't pay themselves because they're just like, okay, if I'm
Scared.
cutting costs, it's scary. We can trim the fat, but at the end of the day, I rarely see small business owners spending outrageously. It's a lot
Mm.
of times with small business owners, I think, is pricing and getting the revenue funnel going. And I hate to say that because I wish it was just a simple answer of like, let's cut all these costs, but it's a bit tough. Like those are the levers I would pull initially, but you like you said, you can't cut everything or else you have
Mhm.
nothing left to provide
Yeah.
for the services and products.
Yeah, so the pricing I think is an interesting one because
Yeah.
I think that lots of times business owners, and I've seen this, their pricing is on par, but their expenses are too high.
Yes.
And so that doesn't mean that they're priced too low. It means that they're, it's hard to think of examples right now, but maybe they didn't need to get this big, huge, fancy space when it's only
Yes.
one person,
Yes.
and I
Ooh,
think that
yes.
if people were to pay attention to that a little bit more, like permanent makeup is a really good example. I think, maybe it's not because I don't really exact numbers. I think it's like $500 for
Yeah.
brows, a set of brows, right? Which is a lot of
Yes.
money. Um, but it's like that across the board, 450, 550, something
Yeah.
like that. You see this client once and then usually never again,
Yeah.
maybe once in 2 years. So you're having to consistently turn over new clients. You're having to
Yes.
consistently find new people.
Yes.
And also, how hard is it on your body? How many of these clients can you actually do every day? So maybe you can only do one or two a day and you can only do it like 3 days a week. That's not enough money to have a commercial space. It's just not.
Yes.
Um,
100%.
yeah.
It's funny, I'm gonna, like I have a thought and I'm, like, gonna run with it because I feel like you
Oh,
opened the door so well. And this is where gross profit margin comes in so much because a lot of businesses will probably they might offer multiple different services. So maybe you offer brows and you also offer like, maybe you do Botox and
mm,
you figure out like, "Okay, my big ticket item is Botox." Like, I am making for the amount of hours I'm spending, the pricing make like people will pay such a higher premium for this, for example.
right.
And so then you're prioritizing of your different services, which ones have the highest gross profit margin because you're getting your most bang for your buck for that. Like you said, if you're having to bring in new clients every single month, it's like if you're doing this whole effort, you might as well promote the product with the highest margin.
Hmm.
So, and that's easier said than done sometimes, but I think in business sometimes we want to just set and forget, like, okay, it's working and let's just leave it as is. But I think it's overlooked a little bit that like you're innovating constantly. Like you're constantly changing and updating and keeping up with the not the Joneses, but the times, right?
Yeah.
Like the
Trends.
demand is always shifting and changing. So
Hmm.
um I think that's a big one. And then also building off that, another KPI that ties right into that is, and this one is like the trendy KPI, but
Ooh.
it's called ARR, another acronym, or MRR. So annual reoccurring revenue or monthly reoccurring revenue. And that is like the best revenue. Like if
Mm,
you can set up, if your business allows you to have subscriptions where you can set up clients are coming in every month, stuff to like, I guess accounting would be an example, like people get their taxes done every year, it's annual reoccurring. Any type of way that you can set up your services and products or add almost something to it where you can get that annual reoccurring, monthly reoccurring, it's just like so nice because you do that heavy lifting, you onboard the client once, you get to know them, so you really get to know what they enjoy, how they tick, how they function. So then not only are you getting to provide like better service and product to them month over month, um, it's just a lot less heavy lifting for you. And it's so nice in that forecasting piece to then be able to be like, could I afford going into a commercial space? Like,
Mhm.
okay, well, like I've had this monthly recurring revenue of $10,000 for the last 12 months. Like, I should, based off of how this is going, I should be able to carry that on.
Mhm.
Um, so yeah, that was my,
That's smart. I don't want to encourage people to create like I think lots of times business owners are like, okay, this is the next big thing.
yes.
This is
Mhm.
how I'm going to get rich.
Yeah.
Um and you can't act that way in business
No.
because people see through it, you know?
Yes.
So if you're creating a membership for your business, it has to benefit the client. It
Yes.
can't just be you're like, "Oh, well, if I'm gonna charge $97 and everyone's gonna sign up for my app," nah, it's not gonna work. It's gonna fall
Yeah.
flat. You're gonna have created an app. It's gonna be just a big waste of money. So I think that, you know, reoccurring revenue is great with
Yes.
intention.
Yes. Yes, exactly. Like, yes, clients will see through it if you're just like charging them and they're really not getting value. For
Totally. It's
sure.
like, yeah,
For
they're gonna
sure.
cancel.
Yes.
Okay, this has been great. Before we end this, I
Yes.
am hoping I'm gonna
Yeah.
put you on the spot. I'm sorry.
Okay. Ready.
I don't know if that's like an accountant's worst nightmare, or
No,
maybe it's
no, I'm okay.
okay, good.
I get put on spot often, so don't worry.
um, you're like, I don't have a spreadsheet for this.
Yeah.
Okay, so what are your story, 3 quick profitability wins that a business owner could implement right now? So something they can take away from this podcast.
I think, okay, this is like maybe not as technical as maybe these aren't as technical as I would
That's
want them to be, but they are like things that I think are tried and true with business owners who find profitability. Is one, perseverance. Like, I think
ooh.
you're going to have good years, you're going to have bad years. And I think, like you had mentioned there, it can be so tempting to try to implement the next thing. Like, I
Mhm.
think that's like yeah, I think so many entrepreneurs are just like, oh, but that looks so amazing and glamorous and awesome. But truly, you have to compare apples to apples and be like, okay, well, I'm at in this business and it's year 6. It's going to take me 6 more years in that business to get to like a similar profitable spot. So
Mhm.
I think perseverance and just keeping focused on what you're doing. And I think the next one would be not being scared to act with urgency when something's not working. So I think
Mm.
too often we get in this habit of like, next month the revenues will come in and it's going to be all good, and then we look back and like 6 months have been going like, "Meow." And so I love when business owners are like, okay, like, I this isn't sustainable. It's like profitability's been decreasing. And so I really respect it when a business owner is vulnerable and is like, because that's the last thing you want to do as a business owner. It feels so like, why am I
Totally.
not profitable? Like, what is going on? But a lot of times it's just having that second perspective. And maybe it's yeah, just a new perspective to talk you through what might be going on in that situation. And oh, okay, my last one is my favorite quote of all. This is so nerdy, but what gets measured gets managed. So the
Mm.
last one is, if you don't have, and I see this often too, and no shade to like any bookkeepers or anything too, but if your accounting and your finances like aren't recorded accurately in a timely fashion, you're not able to rely on your data to make decisions. And I think ultimately at the end of the day, your profitability is going to reflect the decisions that were made throughout the year. So having quality data that can be measured, can be managed, and we can use that to make decisions and actually improve profitability. So I think that's a key one. And this is like just my last thing, but just like, as a business owner, it's so hard to, yeah, maybe ask for help, but definitely don't want anybody to feel like they have to put their head in the sand. Like, that's such a shitty feeling to just be like, this feels like such a mess. Like, I don't even know. I don't even want to look at it. So I think if you have the courage to go out and just be like, okay, I've gotten it this far. I need some support to get it to the next level. I think can only benefit your profitability. So What an answer.
No, that was perfect. I was gonna say mic drop because that was so good. And it's, I love
Really?
that it
Oh,
wasn't just, yeah, I would love that it wasn't just like a formula,
yeah,
like it's not
yeah,
just like you take this and you times it by this and you subtract this and you're making money. And I think that there's so many more things to owning a business and entrepreneurship, perseverance. I mean, all of those things. We need it.
yes, yes. Oh, 100%. Like, I wish it was as easy as a formula, but, um, no, I think it's, the biggest one for me is perseverance. Like, God, business owners weather some crazy storms, so
Seriously.
I
It's
commend you all.
incredible. Yeah. Hailey, this has been awesome. Thank you so much for spending the past 40 minutes, 45 minutes, whatever it's been flying by.
I know.
Um,
No, I've loved
who would
it.
have thought?
I know.
Where can my listeners find you?
Yeah, of course. So I have a fun Instagram where I talk about all things finance, personal and business, because I just like also love personal finance. So I'm on Instagram and TikTok over at Her Money Financial. And my email's linked right on there if you have any questions, want to get in contact. But my email is just hailey.piper@gmail.com.
Awesome.
And that's
And
where
it'll
I
be
hang
in
out.
I love it. It'll be in the show notes as well
Yeah.
if you didn't have a pen while you're writing it
Yes.
down. Thank you so much, Hailey. I can't wait to talk with you again, and we will see you soon.
Yes. Thank you guys. Bye.
All right, another episode bites the dust. If you loved this conversation as much as I did, don't forget to hit follow, leave a review, or even send it to a friend you think would enjoy it. And because I like to keep things fun, we're always running giveaways with our amazing guests. So make sure to check out the show notes, our Instagram page, get in on the details on how to get the free stuff because it's free and fun. And who doesn't like that? Another little disclaimer, while I love sharing advice and business wisdom, I am not your lawyer, I'm not your accountant, and I'm not your fairy godmother. If you do want to be best friends, though, you can hit me up. Everything on this podcast is for educational and entertainment purposes only, so no lawsuits, okay? Thank you for hanging out with me today. If you'd like to hang out more, you can find me on Instagram at I am Heather Dick and at the Expansion Code. And all of our free resources and consulting packages are on the website, www.theexpansioncode.ca. I appreciate you being here more than you know. I will see you next time.